Good evening, all. Ira Epstein, and here we are with your SPDR ETF stock wrap-up for Tuesday evening, and this is the 20th of September, 2022. So as I look at the markets, I was looking to do a little bit of analysis on when you get a price hike, a rate hike is the right way to say it. What has been the reaction of the ones we've had so far this year? What if I tell you after each one, the stock indices have rallied? You heard me, come back up. Why do I think this will be any different then? I don't. After a prolonged break where you've pulled on a rubber band, taken the market all the way down, why not get a relief rally out of the market after the fact? That's what I'm looking for. Would I bet on it? No. But am I ready for it? Yes. Do I think it'll last long? No, because I think that the Fed's going to talk very hawkish. I think the Fed's going to stay hawkish. I think the data has to prove to the Fed when they can back off. And I'm fearful that we've got to analyze the dot plots and what all the different districts of the Fed are saying about their regions. That's a lot to analyze. We're going to get the old yin-yang. We're going to get a report that comes out one way. It's going to go to Asia that night, then on back to Europe and back to us. To make matters worse, we then have this week also the Bank of Japan setting their rates and the Bank of England. It is a rough week. I think Brazil's in the mix as well. So it's bank after bank. If you look today, you saw that in Sweden, the Riksbank, R-I-K-S-B-A-N-K, they came out and they went up 100 basis points. They haven't done anything like that for 3 decades. So inflation, that will keep a cap on many of the stock markets, even with a relief rally. What the next shoe to fall is going to be is, I was watching today on Bloomberg, they were talking about it and interviewing people. I have been telling you that for a week now, that the next shoe is going to be the PE ratios. They're going to get crushed. They have to come down. Now, many of the markets have already taken advantage. If you looked at Nike went from $180 to $105. You don't think that their PE ratio is getting crushed? The market's doing the job, but the analysts now have to come out and say, well, this is what we think, this is what we think. That is your next stage. So for September and October, those are the stages. And I have not changed my opinion longer term. I think we will get a year-end rally. Not a dramatic one, but a year-end rally out of the market. And then we start afresh and we start arguing what's 2023 going to hold. That's where I'm at, okay? When I look at Home Depot, obviously, this is a bearish chart. The market has come down. In order to negate the downtrend, you got to get over 281.23. The pattern is one where you've got the 18-day under the 100. The 50 over here isn't under the 100. That would have been the ideal scenario, but the 200's way up there. It's a bearish scenario and everything there. When we take a look at where the support is, the market ran the lower Bollinger Band. But if you get over that 281.23, I wouldn't be surprised if you get a bounce in the market. Am I bullish? No. I would be defensive if I'm bearish, and the market is oversold. That is the point that I'm making in it. Netflix has got its new programming coming out. I think people are going to run at it. I think they want the product. They'll say, hey, I can't pay whatever the current price is. I don't even know I forgot myself what I'm paying. But I have Netflix, and I won't change. I happen to like that I can watch a whole thing without those annoying ads come in. I don't go to movie theaters anymore. So for me, it's worth watching these and not getting the ad break on. That's not for everybody, and that's going to be how people work. But would I ever tell you to buy an upper Bollinger Band? Slap me in the face if I do. No, that won't happen. In Apple, I feel good on this one. First of all, market turned its momentum. Number 2, made its challenge of the Bollinger Band, the 100-day average. That was the zone to be coming out of shorts, and now the market has gotten high enough where it's no longer in the bear camp. It's waiting. I went today and ordered my iPhone 14 Pro, and I got the normal size, not the 6, 7. It's too big for me, but that's what I ordered, and I'll get it. Ships October 7th, and I'll let you know. I'll do my review and tell you what I see about it. In Disney, they're getting beat up. People are doing what we talked about. People are saying, I can't afford to go to these theme parks. Now, they're not only a theme park company. You know it and I know it. But they lose the theme park business a big way now, too. All the kids are back in school. So, people don't take their kids typically. Hey, let's pull you out of school and we'll go to Disneyland for the weekend and I'll blow $2-3 grand as we do it and I'll get you back in school by Monday. It sounds great. It isn't happening. Lower highs, lower lows, but you're coming into the support zone of 106.33, the 100-day average in the Bollinger Band. Danger, danger. Be careful. Market also coming down and oversold there. XLF. A lot of resistance on a rally back to 33.41 to 48. Do I think the pros want to sell the market? Not when you're oversold. You're in a bear trend. You're close enough to the Bollinger Band. I think smart money is going to grab money now and say, let the report come out. I'll wait 48 hours or so and see what the market wants to offer me on it. Same thing in XLI. You keep going to the band and you're hanging in there. The market is trying to embed. Embed means you get the red and the blue lines going sideways under 20 more than 3 sessions in a row. That's what it's trying to do. And if it does that on the big rallies, that'll be where I step to the table and say, hey, as long as you stay embedded, I think you keep selling the market. XSD, oversold, in a downtrend, had a bearish crossover, still a lot of resistance, 169.90 to 171. If you don't take out the lows of yesterday, and the market can clear this 157.03, you could actually, if you got over everything there, be on the friendly side of this. But first thing would be you'd neutralize the bear trend. Bears are in control, but you're sort of waning right now on everything. Certainly it doesn't help any business to see these interest rates going crazy to the upside, and they're going to keep going that way. The Fed has 2 goals, to control inflation and full employment. Don't think they look at the stock market. They don't. That's not their job. That's the Treasury and the President and Congress. Those people do that. The Fed has to control inflation. It's one of their 2 mandates. They have full employment. Guess which number is going to go over 4%? Unemployment. It's going to be one of the 4s. It's going to be, we're going to get over 4% short-term rates. You've got inflation at 4.3%. And guess what? You got to drive unemployment from this 3.5, 3.6 area over 4%. Those are the 4s you're going to see. And as those occur, that will start putting the lid on the market. And this market's not going to turn bullish right away. It's going to maybe not be as bearish. That will be the thing. And I'm going to repeat. I don't see how this market goes into any form of a serious break. It's not enough serious as long as unemployment is 3.5 to 4%. That gives you a strong economy overall. On the energy sector, you've come down to the lower Bollinger Band. You know that OPEC has got its issues. They're not meeting their quotas of production, and yet they can't support price. They can give you all the, quote, BS. We're going to cut production 100,000 barrels a day. Folks, they're 3.5 million barrels a day shy because all the members aren't producing what they should, and the others aren't making up that difference. Got it? That is the net difference. In gold, still in a downtrend. Gold is not going to keep up in this type of market with doing well. Why? You can make more money. You can buy a 2-year note and get a 4% return almost. What do you need gold for? Gold is supposed to be the inflation hedge. It hasn't done that, nor is Bitcoin or Ethereum. None of those have. In order to negate the gold miners, you got to get back over 24.43. Without doing that, you're still in a basic bear trend. Copper market fighting a big battle at 30.40, not doing much. TLT, BND, come on. You don't even want to look at those charts. Let them do their thing tomorrow. In the dollar index, I certainly beyond 29.62, as bullish as you might think, whatever they're going to do with interest rates for the dollar. That chart is saying, be careful. Upper Bollinger Bands, you rarely go shooting right through them. Tell me the last time you did on this chart. You can get up to it. You've got 2 days here, and then you pulled right back. You can ride the bands. You're not going to shoot through it and just keep going, in my opinion. It could happen, but I don't think it's going to happen. FXE, if you want to break down from here, 91.46. Real problems are in Europe. The price of energy. They are definitely getting the oil and the natural gas they need to make it through the winter. The cost is horrendous. 30 billion euros for Germany to get what it wants. We're not talking chump change. We're talking major amounts of money that are breaking the backs of the economies there, and they have a serious problem. The last thing they want to do is raise interest rates for inflation, and yet they got to get that energy. And what is Putin going to do? Putin is going to play the Putin game now. He is going to have the elections in 3 or 4 regions of the Ukraine. The people there will say that they want to be with Russia. He'll annex them, and then he'll say he will use nuclear weapons if anyone bothers him to take those countries. How do you stop him? I think you're looking at the end of that war region, other than Ukraine keeps going at them. Ukraine, not NATO. And that is different. I don't think that because he started this, he can pull that nuclear weapon trick with the Ukraine. They don't have nuclear weapons. So it's very complicated, and he's got himself into a true quagmire. He's losing this war at this point in time, both probably in the rest of the world's point of view. Watch the UN speeches, you get an idea. He's a pariah now. His best friend is Iran, China, India. Doesn't have many more people can go to. Venezuela's there because they'll give them money for that and they'll do things with them. But as for everything else, no. He never did a lot of trade with the United States, so I don't think he cares about us other than we're the big muscle. And he can talk all the nuclear weapons he wants. We can take them off the map, but he can do serious damage to us and everybody else. Remember, if he fires a weapon, everybody's firing at him. Don't forget that. Everybody. There's a lot of nuclear weapons. We're all dead. So that isn't going to happen. I mean, I'm giving you the doomsday thing, and because things can get so bad they won't happen, he could also be taken out. Don't forget that. He is not, but in the military, probably the favorite guy at this point in time. But these are my opinions, and I like to carry on with them because I'm opinionated. In any case, if you're going to trade tomorrow morning in the ETFs or the afternoon, you're going to trade in the futures markets. You know, I offer a combo package here. Let me explain what that is. A combo package is this simple. In the combo package, what takes place is you get my futures morning video, you get the ETF video. One is recorded at 5:30 in the morning, a.m. Central Time, the other at 9. I like to let the first half hour of trading in the stock market go by is the algorithm traders. They place their orders. They drive the market a little crazy. The U.S. economic data is coming out often right at that time. I'm recording, telling you what to do right by 9:30. That's the purpose. You get 48 videos per month, per 30 days, I should say, because it's a 30-day subscription. So you get all those with ideas long-term, short-term. Here's why. Here's the chart action. This is why it's based on. Not the fundamental part alone, but the fundamentals are certainly there because I talk in each one of the reports what the fundamentals are looking like, what is going on. I promised you I was going to do a lot of special reports this year. They will begin right after these reports come out now. The central bank week, that's when I'll be taking them and doing them on a regular basis. We already had our first webinar. So all that is included in this. How do you get it? It's simple. Go to our website. Under the word research, you'll see it right there. If you want to get it quicker, just follow my finger. It'll take you right up to the top over here. And from there, from the very top, you'll see an icon. Give it a click. It'll take you right into that area. I'm Ira Epstein. Can't wait for tomorrow. You have a great evening. See you then.